Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. Today I want to go ahead and review some very important stock plays I see going on in technology, energy sector, go over some key things in the market. So this is going to be a video primarily focused on the stock market, and yeah, let's go ahead and get to it. Alright, first let's start by reviewing the dollar index. Dollar index has been able to find somewhat of a support. If we go ahead and look at the 5-day chart, we can go ahead and see that the markets have been able to go ahead and peel back over and go ahead and break that key neckline that I was kind of pointing out. Let's go ahead and point it out to you guys again. You got this inverse head and shoulder pattern. You got it right here. And pretty much we pretty much we went ahead and broke that neckline area that I was mentioning a bit earlier, and yeah, we broke it, and now we're going ahead and going higher. We're going to go ahead and head a little higher now, and pretty much this neckline area is not only going to serve as a great area of support, but any future instance of touching this could be seen as a quick bounce off of it. However, if there's prolonged activity on this line, be aware that it could be broken and broken very easily. Now, pretty much, yeah, you got to go ahead and play this market to the upside on the dollar index, because chances are it could be able to use this resistance area as future support. That's generally how technical analysis usually works. Now, without any further delay, let's go ahead and look at the next chart, which is going to be the Dow Jones Industrial Average. The Dow Jones Industrial Average was relatively flat today. You didn't really see much action on the Dow. And in fact, stocks were really all over the place. You see a lot of choppiness. You don't really get a real sense of, of where stocks should be going or shouldn't be going. Dow Jones was positive by around 23.31 points with a 0.19% gain. You pretty much got the NASDAQ composite flat on the day, and the S&P 500 was relatively, flat as well at a 0.03% gain and a 0.46 points gain. So, you know what? Not much on the indexes for today. Overall, markets are relatively flat, and you can see that because we keep on testing this this resistance area. The more we keep on touching this resistance trend line right here, chances are we're going to break it eventually. So just keep that one in mind. Just watch the 12,400 area, but I do anticipate we're going to break it because we're only like perhaps a week away from earnings, and the main earnings at that, the ones that come from the blue chips. So we got a lot of stimulants coming into the market, and yeah, so throughout April you should have a pretty positive mentality, but things will start changing up in May. Now let's go ahead and review my favorite tech stock, or my second most favorite tech stock of 2011. And pretty much I did like Fitrade Holdings, and I do like it still. It has gone even higher. It's trading at around $23 per share. It has been able to break that key $20 level, and it's going to most likely continue going higher. We don't have any reversal signal. This could have been a reversal signal, but the following day it was able to find support at the $20 and confirm above it as well. So, pretty hard to say anything bad about this chart at this point, because we have a really strong uptrend in motion. Let's go ahead and move on to the next chart, which is going to be Intel Corporation. Intel Corporation is having a very weak day. A lot of people on Wall Street are anticipating a great entry on 1890. At least that's what the rumors are saying. 1890 would be a good entry. That's where a lot of key institutions are eyeing the stock right now, and that's where they plan on clobbering it up and buying it up. So pretty much this is pretty much an institutional game of warfare. And pretty much people are slamming down semiconductors so they can get a better bid on it. So yeah, anticipate some great support at the 1890. There's been two pivot areas, pivot right there, pivot right there. It pivoted off that twice already, and I can see this market pivoting off here again. So nothing fundamentally has changed from the semiconductors, and I do believe that they're still strong. So without a doubt, I mean, a lot of the semiconductor stocks that I personally like, well, Nvidia is also getting hammered. So you're just going to have to wait until Intel finally finds some support and semiconductors are loved again. But right now they're seriously underweight, and they're going to continue to do so until institutions start picking them up again, and that's going to be around 1890. At least that's what the rumors say. Let's go ahead and move on to the next chart, which is Research in Motion. Research in Motion has broken that 200-day moving average. Again, I wasn't anticipating much except for a couple-day bounce off it. It bounced off it a little bit, and then it could good play off of the 200-day moving average. I've seen this company break the 200-day moving average time and time again. There's no logical justification for anybody to buy into a stock that keeps on breaking the 200-day moving average, and just disappointing investors in general. Research in motion is being basically outcompeted by different platforms. Apple is doing their own thing, and Google, with its own Android platform, is doing its own thing. And research in motion is playing on some different island, and they're doing their own stuff too. So again, I honestly think that Android and Apple is the way to go, and I don't really feel that confident with research in motion. Don't get me wrong, I do think their phones are great, but at the same time, are they going to be as competitive as the Android platform or the Apple platform? That's something to look. That's something for everyone to see eventually. But I don't really think so. And again, this stock has just broken the 200-day moving average, and he also got the most hideous pattern in the world, and the most hideous trading pattern in the world, or the most hideous trading pattern you can ever encounter on a chart is the head and shoulder pattern. Once you get a head and shoulder pattern in play, that's really negative. You really got to be careful. And basically, once you break this neckline area, it's pretty much game over for you, and chances are the stock will continue going lower. And that's exactly what we've seen. We have never seen it go back above that neckline area. In fact, it's touched it 1, 2, 3 times, and it just hasn't been able to confirm above it. And of course, when you don't get confirmation, you're only going to confirm down to the downside. All right, now let's look at the Ford chart. Ford chart is doing pretty good. It is holding on to the 50-day moving average, and believe it or not, I think that institutions are still liking this. George Soros is still backing it up. And remember, George Soros is, I mean, I guess people really like what he thinks. He has a really great track record, and pretty much the price is right. And I think that a lot of people still like Ford, regardless of what's happening in Japan, the whole entire manufacturing issue, people having issues ascertaining what's exactly going on with the whole entire production line. Remember, if you have one component missing inside of a car, you can't make a car, and a lot of production is getting jacked up in Japan. But a lot of people are speculating that Toyota, Honda are going to get the brunt of it, and Ford is going to get off with a slight tap on the wrist. Maybe you probably can't get a couple paints in this color or that color. You might not be able to get a car in black or red. But honestly, who cares? If you could honestly buy a Ford car at the very least, then at least they can sell a car. Whereas with Toyota, I mean, they might not even have Priuses on the lot to sell. So, if just showing up is 80% of the deal, and Ford is able to show up and at least sell a car or two, whereas you see these Japanese automakers unable to do that. So that's why I think a lot of people are anticipating a bit of a stronger forecast coming out of Ford, the Quake tsunami thing that kind of struck Japan. I do feel bad for them, but remember, you got to watch out for what you can do and how you can make profits in the markets, and always. Now let's go ahead and look at the next chart, which is going to be FSLR, which is First Solar. I do feel very positive on First Solar. We are touching this key trend line right here, and pretty much we've been able to bounce off of it, and we are touching the 50-day moving average and have been able to bounce right off it as well. Now, for as long as crude oil prices go up, I think that solar stocks will continue going higher. Remember, solar stocks do like the more expensive oil play. Why? It's very simple, because if oil is more expensive, people are more willing to install solar panels to their homes and go out and buy cars that can charge themselves in electricity, and the whole entire green thing becomes more popular as people can project more cost savings from a solar system than they can from a coal or crude based energy production and consumption mentality. So the thing is that if oil prices go up, these solar companies can project higher prices and therefore higher utility rates. But and then they can sell these solar panels, saying, hey, you can cut off or reduce the amount of cost in terms of energy based on these future projections. You will save an X amount of dollars, and therefore solar companies will be able to benefit off of higher crude oil prices because solar panels become much more competitive. Anyway, that does it for me for today. If you guys have any questions, please be sure to leave a comment right below, and I will go ahead and get back to you on that. Be sure to go ahead and subscribe to my YouTube channel if you're interested in this kind of stuff and you guys want more access to it, as I will have more content for you guys in the coming weeks and months ahead. And also, if you guys want to use the same exact charting software that I use, yeah, just go ahead and check out the link right below this video. Anyway, take care, guys, and I'll go ahead and have more for you later. Bye.